Hi, this is Randy Finney with the Right Side of the Chart, and today's Wednesday, July 19th, 2017. This is video number 4 today. I'm highlighting any sectors, industry, or commodities that stand out to me. And we're actually going to kill 2 of those with one stone today. We'll talk about the home builders as well as timber. As far as commodities go. So let's dive into the charts here. Before I get to the specific charts of the home builders and any of the stocks, there's just a handful. There's not too many, so this video shouldn't be too long. But I wanted to impress upon everyone the correlation that the home building industry has to the timber industry. I had mentioned that in some of my commodity updates recently. So here's ITB. There's 2 main home builder ETFs out there. There's ITB, which is the iShares Dow Jones U.S. Home Construction Index ETF, and then you have XHB. Let's show you that one. Here's XHB. And that's just another competitor. So the charts will mirror each other. When I put up these comparisons, what you're looking for are directional trends. Doesn't matter if one's outperforming another by a certain amount. You want to see them moving in synchronicity. And well, obviously those 2 are ETFs, so they're going to move the same. Now let's take a look at something else. Let's take a look at wood. Wood is an ETF for timber. It's timber ETF. There's wood and cut, so I'll add that one as well. Let me add cut. And these are the 2 timber ETFs that I follow. And as common sense would dictate, they marry each other. And you can see there is a virtually one-to-one direct correlation. Again, when you're doing comparison charts, don't get tied up in the differential price because they're not going to go up in the same percentage term. It's like overlaying a comparison chart to GDX with the miners. They will move in almost near perfect synchronicity, especially when viewed in long periods of time. So you're looking for one going up and the other going down. So you see the correction here, and there it is. So basically, you can trade it either way, and it only makes sense. If home builders take a dive, that means their business is slowed. If they move down, especially if they break down, build less homes, use less timber. It's that simple. Okay, it's not rocket science. So there's the home builders, or this is ITB versus those 2 ETFs. Now let's also just take a look at the home building stocks. As common sense would dictate, they are components, but I'll tell you, these home builder ETFs, they also throw in things like Home Depot, the home improvement stores, furnishing, and yes, they're also going to move in give or take, but not in direct unison with the home builders. More or less they will. So let's just take a look at some of those. Let's take timber off there. That's wooden cut. And so here's some of the big home builders that I'm watching. THI, LEN, Lennar, DH Horton, Toll Brothers. These are home builders I've traded on and off for years. I haven't touched them in a while, but it's time. The charts are looking interesting, and hence the reason for this video. So there they are. As you can see, they're going to move in almost perfect correlation as well. All right, let's just look at a few charts. Let's talk trade ideas. The trend in the market has been just relentless. We've had a couple pullbacks, some things that look like sell signals. And as I often say, I say this a lot. Trade stocks, not the market. There are times, and I haven't had a market official long or short on the markets in a while. I put market analysis to try to gauge where things are going, but the money is made for a swing trader in trading individual stocks and sectors because the market, I've always said this, problem, you take the S&P 500, which is commonly referred to as the broad market. It's the most diversified of all the major indices. In the S&P 500 is made up of nearly 500 companies, and it has 11 different sectors in here: financials, energy, and then when you drill down the energy industry, really, you have the different subsectors. You have solar, you have geothermal, you have oil and gas. Gasoline prices can sometimes go up when oil's going down. My point being that when you short the S&P 500, you're shorting the most bullish stocks and sectors along with the most bearish. Likewise, when you go long, You're buying the worst sectors, and it's going to hold back the return. So what I like to do is sniff out any particular sectors or industries, and then even once I identify a potential reversal or a rally or correction in a sector, I'll further drill down to the components. So I use that top-down approach. Now, top-down really starts with the market, and yes, the market's in a broad uptrend, and what that does, it makes shorting harder, more difficult, but that's not going to continue forever, and I always like to have a combination of long and shorts out there on the site, and as well as trading personally. And I've also said this, we've seen a lot of sector rotation the last couple of years. In particular, last year has been one marked with tremendous amount of sector rotation. So here's one. Looks poised for a correction. This is a daily chart of ITB, the iShares U.S. Home Construction Index Fund ETF. Very clear negative divergence. The PPO is curled down now, confirming that divergence. All I'm waiting for now is a sell signal. We had an intraday pop yesterday. I've been watching these for a couple days, but again, the trend is so strong now, I'm waiting for some pretty decent evidence. So what I'll probably want to see is a breakdown not only of this trend line, either a solid daily close before it, or I think if we take out that reaction low yesterday around 33.84. And targets, you can see them down here. They're marked on these lines. So let me just give you in perspective. That's about a drop of over 8%, 8.25 to that first target, and I favor ultimately a move down here, and that's about a 13% drop. And again, we can pick out some of the most bearish stocks. There are some home builders that look better than others to me. XHB, as you guys know, if I'm looking at a sector or a commodity or anything else, I'm not just going to look at one single chart. I'm going to look at them all. So here's XHB. In addition to seeing ITB breakdown, I want to see a breakdown of the same, very similar bearish rising wedge in XHB. And from where we're at today, that would be a drop of about 6% to that first target. And, you know, from there, it's pretty decent support. So that would probably be where I'd be looking to cover any positions. Again, we don't have any shorts now. I'll show you a few trade ideas now. So those are the two charts. We need to see both of those break down. And then as far as individual trade ideas go, let's look at a few. This is not a home builder. You guys probably know the name, Owens Corning, OC. Get up in your attic, that little pink stuff, the sheets insulation, and a lot of other stuff. They do building materials. So that chart is just, it's a textbook, perfect looking bearish rising wedge. It doesn't get much better than that in my opinion. But as I often say, support is support until and unless broken. So we're near there now. We could break down any minute. There's support just below that needs to be taken out, or we could have another thrust up within the wedge. But I do see this wedge breaking down sooner than later. It's getting pretty ripe here, you know, just as the home builder wedges on those home builder ETFs were. And then you can see any of all of the targets. This would be my preferred target down here. So I see things playing out somewhere along these lines, you know, reaction there. I tried to draw it, you know, hard to say where it goes. And then I'd be interested in covering this one down around 56 or so for a longer term swing trade. Sometimes I'll game the bounces off support. Like I definitely would expect a reaction when it gets there. So maybe I, you know, cover, trade a bounce, go back short. It depends how active of a trader you are. But if you want to swing it down, there's about 14% downside on OC. DHI. This one's not even close to its uptrend line. However, you can see the negative divergence. We're about to cross down. If any more downside in the stock on the PPO, divergent high. So this looks like an ascending price channel here, and it does appear to be flagging. This looks like a bullish pennant or flag. You can draw it either way. You can draw a pennant like that, or if you want to clip out and exclude that little line there, a little bull flag. Something we need to watch. So again, these are just setups. It's a big difference from a trade. You know, I can point out something that looks poised to go one way or another, but until you get the sell signals, it's not a trade. Now, what we might see here, maybe we pop up and then fail. As I often say, fewer things are more bearish in trading than a failed long side or bullish breakout. So if all eyes are watching this flag and if we break out and it looks like the real deal, you're going to see the longs pile in. Any shorts that might be in the stock now, I don't know why you'd be short the stock yet, but they would probably cover. So look for a reversal. So one possibility that I could see playing out, because I really think the upside in these stocks are limited, would be a move up maybe to the top of that channel again. It would be an aggressive entry, but you could add a short there with a stop somewhat above. And if you get that reversal, it'll probably come pretty quick, because that'll prove to be a failed breakout. And you could swing that one down to either the trend line or the support level just below, which is around 34.57 is where I have the line at. All right, a couple more and we'll wrap it up. Like I said, there's not too many publicly traded home builders. PHM, beautiful bearish rising wedge. You can see here we had a divergent high at this point right here. Let me get grab my arrow tool. This was a divergent high right there. With that small divergent high, you had divergence here on the PPO from this point to this point, and divergence on the RSI, and that did play out for a nice correction. Then prices set up within this larger rising wedge. You can see prices contracting. That's the nature of a bearish wedge. Price compression. We have confirmed negative divergence. And what I like about this one is we have support just below. I love to see two key support levels get taken out at once. So my sell signal here would be not just a break of this trend line. We had a little intraday break yesterday, but a breakdown and a break of this horizontal support level below that's right around 24 or so. And I don't see anything stopping the stock until it gets down here at around 22. I see a little minor support level here, what I'd expect a reaction, and that's it. Here, I'll give you the levels. 22.28, so call that 22.30. Then 22.10 would be a swing target. That would be a drop of about 9%. So you see, it's not coincidence. These projected targets that I have, that 8-9%, that goes in line with roughly what I see on the home builders. Although on the individual stocks, you can expect a little more downside, because in this watch list I've added here, I've only added the ones that look bearish to me now. There's some home builders. Either the charts aren't that clear, they just don't look as ripe for a correction. LEN, bearish rising wedge, very clean, well-defined. I have sometimes on a wedge or an uptrend, I'll do parallel uptrend lines, because they both capture a lot of reactions. This lower line captures the spikes. You can see these candlestick wicks, these intraday breaks. There was a little breakdown there. And in trading, when in doubt, I always give it to the second of the two trend lines to break. I have no desire to short this first one, because this stock has a history of little whipsaw signals through it. So this is the real one right here, and let's just color that yellow so it stands out. I'll set a price alert on that. Oops, no, wrong one. Delete that. Click on line and create set alert. Okay, there we go. Alert created. And there's the target. So it's also flirting. This was a resistance line here. It made a breakout. It failed to hold that level, tried to break out again. If it fails, what I like about this one, in addition to the bearish rising wedge, this is a failed or false breakout. Tried to make a run at, there was a false breakout here of that level, fell back in, and the stock got hammered. If it fails here, it had 1-2 attempts, and it's back down on that line now. It's probably coming in pretty quickly. So that target would be 49.60 would be my minimum target there, swing target on LEN. Here's Toll, clean, nice rising wedge. A lot of reactions on this uptrend line to validate it. It's flirting with it right now. You can see all of these had that little false whip breakdown yesterday. And this is, the nature of a overall bull market. You're going to tend to see increased sell signals, failed breakdowns, I should say, failed sell signals on short trade setups. But this chart is what it is. And, you also might have jumped the gun by not waiting to see confirmation on several of these home builders as well as the ETFs. So again, just like I said on the home builder ETF, I think the next time we come down there and we take out that low, there's also some mild support there. That's going to be my sell signal, where I'll probably establish a position in Toll. And targets, I should give you one here. Certainly, remember when I put these lines are the actual support levels. They are unadjusted for an optimal fill. If I was targeting this as my target to cover, I wouldn't cover it, set my buy to cover order at 35.07. I'd have it just above. just in case the stock reverses shy. There'll be a lot of eyes watching that level. And there's another line right here, top of a gap, some reaction highs. And so this one has the potential to go down to about 33.60. And that's not a bad trade. That's about 15% drop. But again, I would expect a reaction there first around that level. And as I often say, you know, I don't trade any one of these stocks in a vacuum. Let's just say, for example, I happen to the only short exposure I wanted to the home builders was in Toll Brothers. I wouldn't trade just looking at this chart. Every day I would check on XHB, ITB, and several of the other home builders. Why? Because if I see all those coming to support, let's say I'm targeting 35, but right about this level, when this stock gets down to about 36.50, I see all of the other ones coming to support levels, especially the actual, you know, sector ETFs. There's a good chance there's going to be a bounce. So this is where I'm going to cover. I'm going to revise my trading plan. That's why I often say, you know, the charts are dynamic, and so is my trading plan. When things change, you have to adapt. So there's Toll Brothers, and NVR is another one. Really, boy, this one's lofty. A lot of hot air. This residential construction on this one, and there's your price channel. So break of that price channel is going to bring us down to this line here, I believe. At least that's about a 9% drop. And I'll tell you, it's pretty thin below there. If things get really ugly in the markets or in the home building sector, I can just say that now. You know, a lot of where any counter pullback trades, short trades, as long as a trend is up in the market, I favor the earlier targets. If the market breaks down and gives us some solid sell signals, then there's a lot of hot air to come out of these stocks. TPH is another one, but I'm not crazy about that. That's actually one I put in here. I should clarify, I have no interest to short that one. So I guess I did go ahead and put in most of the home builders in this watch list, but that's another one. CAA, no desire. And for those of you that like the leveraged ETFs, remember, they can be devastating to your portfolio, especially if you hold them for too long in a choppy market or against a trend. But there's Claw, which is the 3-time bearish home builders ETF, and Nail. So these guys are just like, you can go bullish or bearish using 3-time leverage. You know, where the bearish ETFs and unfortunately the home builders, if I'm not mistaken, these are the only options to ITB and XHB. So if you wanted to, you know, diversify within an IRA where you're long or a other type of non-margin account, then where you can't short, ETFs or the inverse or bearish ETFs are really your only option. But favor those being long, you know, quick trades, I should say, not long trades, short-term trades. All right, that's my take, and there's Nail. I mean, you know, these don't track horrible because the trend has been pretty unidirectional. So you can look at this. This one hasn't done an awful job. It's thinly traded. You can see these candlesticks down here, but it's starting to catch some volume. You can see how the candlesticks are normalizing, and that's a reflection. You can look down below and see my volume bars. So these are, you know, relatively new ETFs. Nail has definitely more volume or hence liquidity than Claw. Claw is the inverse one, but same chart, everything would look the same. Trade them as you want. Claw, as I mentioned, pretty thinly traded. So that's up to you whether you want to use those or not. So that'll be on watch. I'll probably put some of those setups on the site sooner than later because they look ready to pop any day now. But again, it could be weeks, months, or those patterns could be burned through, and anything's possible. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.